Okay, let's now connect with Charandeep Singh and Varun Daga, co-founder of Greek Capital, to take our conversation forward on where they feel markets are headed and how are they approaching this market. Gentlemen, fantastic to have you back. Thank you for joining us. Normally I start with Charandeep, but let me this time start with Varun. Varun, this question is coming your way. Good morning once again. What do you make of the market? The price action in the month of August and September has been absolutely stellar. Not only we've gone up in a straight line, we've also managed to buck the global trend. How would you define this? Why do you think India is outperforming in such a smart and handsome manner?
Thank you, Nikunj. Thank you to all your viewers. Let me start with saying good morning to everybody. So Nikunj, first of all, let us now understand or accept that we are in a bull market. I think last 1 year or 1.5 years, we were just wondering that whether this will last or whether it is going to continue. But I think market has every time proven everybody wrong that it is clearly in a bull market. And this time, I think a lot of industries are also coming around. We are seeing old economy, new economy, all the sectors firing. I don't think in our 10-year history or 12-year history, we've seen so many sectors do well at the same time. So I think it's clearly a bull market. Having said that, it reminds me of when we started in 2009. Markets had run up a lot from the lows of 2008, from about 2600 Nifty to doubling to about 5200. And when we started, it was a very similar kind of situation where markets had run up a lot. But even from there, in the last 12 years, where the economy has not really performed that well, the index is up 3x. And we are, as a fund where we pick winners and leaders, we are probably up about 10x. So the point is that, today we are probably in a much better situation, and the future looks good. Having said that, in our 12-year journey, where the index went up 3x, there were about 6 times where the index fell from anywhere from 10% to 38%. The recent fall last year, the COVID crisis, was a 38% fall on the Nifty index. So from 10% to 38%, almost 6 times. So almost every 2 years, we saw a major fall in the market. And the broader index, of course, fell harder. So, if one is ready for that volatility, I really believe that the next 10 years could be very, very exciting. We've seen India come up a long way. I think India will also outperform because the profit pools in India is just growing at a very, very fast pace. You had 10 years ago, you had probably 4 companies making a 10,000 crore plus profit. Today, you have probably 15. So the pace of companies making profit, the amount of profitability in each of these companies is just going up. And to add that, there are new sectors that have come up. 10 years back, there used to be IT, pharma, financial. Today, there is so much more, right? You have chemicals, you have many more sectors, and you have individual companies that have come up to the front and have got listed. So exciting times, but be ready for volatility. And for people who can stomach that volatility, I think there's no better place to be.
Right. Charandeep, just about every second brokerage report I've read, they are in a sense echoing the same concern that market valuations are at an historic high and you got to watch your back now. So as a money manager, are you accepting fresh inflows? What are you telling your clients who are ready to commit capital to you now? Because in a bull market, typically maximum money to fund managers always comes at the peak.
First of all, good morning, Nikunj, and good morning to all your viewers. And good question. because, we are active in the market. We are constantly raising money. We are an open-ended fund. So we are, the answer is yes, we are raising money. I think, there's an old saying which I've quoted before on your show is, bull markets born on pessimism. They rise on skepticism and they die on euphoria. We are probably just past that pessimism phase. A year down the line, it looks like we were in the euphoria phase. So it's a really funny thing. What are we telling our investors? We are simply telling them exactly what Varun just said. Varun explained you how we could potentially just be getting started, here in India. Or, if you look at the last 10 to 12 years, look at the script. You had in 2011 a telecom scam. You had a big run up, the markets fell. Then you had the INR depreciation, right? Then you had the devaluation of the Chinese yuan. You had a lot of political uncertainty from 2011 to 14. You had the IL&FS crisis, you had demonetization, you had the DHFL crisis, the Yes Bank crisis, you had COVID, you had wave 2. Despite all this, if you look at the peak from 2008, we were at 6,300. Today, we were at 21,000, which is a more familiar number. From 21,000, we are now up to 16,000, right? So markets, if you look at earnings growth, they've kept pace with earnings growth. And the earnings growth has not been stellar in the last 30 years, right? Despite that, you've had serious returns, right? If you take your nominal GDP growth or your nominal earnings growth, it's 10 to 12%, maybe a little less over the last 13 years. I think what we're telling investors today is just look at history, a dark phase in the history of India. What you have now is lots of money pumped into India by the unicorns, by PE and VC funds, who are now bearing the reward of risk they've taken in the last 10 years. You have multi-billion-dollar companies taking birth in India. The billions of dollars that have come into India are creating a multiplier effect, right? They're creating a multiplier effect in terms of wage inflation, in terms of consumer demand, right? Secondly, you have a government that's supportive with reforms. You have a PLI scheme that is just kicking off. You have China Plus One, which is, from what we talk to companies, is a huge, huge benefit to Indian companies. So you could have massive capex cycle, combine this with deleverage balance sheets, where there's been a huge cleanup in India over the 10, 12 years, both at the banking sector level and at the corporate level. This is a cocktail for a bull market, right? You should be able to beat that 10 to 12% earnings growth over the next 10 to 12 years, right? So just look forward. I think you have a lot of visibility to this. So investors who are coming in today, we are saying, listen, are you worried about the next 3 years? Then invest slowly and sensibly. But if you're not worried about the next decade, then you should go all out, right? Because you should be willing to stomach volatility in equities, and you're going to get rewarded for it. So be consistent and keep adding money to your portfolios, keep building, adding money to your India portfolios, because the story is very secular for you. It seems very clear to us that you will make money. You should easily be able to beat the last 13 years returns in India, which, like I said, was not an easy phase for you. So this, Nikush, this is the script, right? This is what we're telling investors. And I think,
fair point. Okay.
Despite that,
so
investors are...
Sandeep, yeah, I mean, the messaging is very clear, which is what we wanted to bring out for our viewers, that you're still finding opportunities, you're still picking your spots, and you still feel that there could be, this is not the end of the road. Of course, in any market, the speed bumps would always be there. So I'll pick up some sectors which are now part of your portfolio. And first is the entire metal sector. Given the kind of news which is coming on how Chinese are cutting production, on the other hand, you've got this entire Evergrande issue which could blow up, and we don't know which way that tail is going to twist. How do you see a sector which in a sense is always considered to be a sector which is more a risk-on sector to move?
I think Girik has said this many times in several interviews, Nikush. We are believers in two things, right? One is, we don't define things as cyclical or structural or consistent compounders or anything like that. I mean, everybody has their own style of management. We respect that. What we say is, let's start by not defining these things as cyclical, right? They may be cyclical. The pricing is cyclical in these metals, which causes volatility in stock price. But 2011-10, you had the consumer sector, which was trading at 20-25 times earnings. It was considered defensive. Today, everybody's chasing them as growth stories, right? So, the point is that, if 4 or 5 years pass in, say, a Hindalco's earnings stream, if aluminum, if Novelis does well, if aluminum prices stay above a certain level, because, there are supply shortages all over the world. And it's not so easy to put up a large smelter today, given environmental concerns. you could have earnings growth that is, which could end up surprising people. Now, if that happens for 3 or 4 years and prices appreciate, this will start finding its weightage in the index go up. It will force people to buy. Then stories will come around it. So markets are funny beasts. They tend to write things off as cyclical sometimes when they really may not be as cyclical as people think. So that would be my take on defining a sector like this as cyclical. You need to be open-minded to look at risk and look at reward at any point of time.
Fair point. Varun, I want to discuss a stock like Bajaj Finance, and that in a sense will be remembered as the ultimate multi-bagger or the ultimate wealth creator for minority shareholders. But the move in Bajaj Finance from 4,000 to 7,000, or let's say from 5,000 to almost 8,000, has come in a jiffy. What are markets excited about? Because one side you've got the birth of fintech, which is disruptive, and here's an NBFC which is trying to become a fintech. Who will win?
Great question, Nikunj. I think everybody's pretty shocked how this happened, but I think what's very clear is this company has always surprised everyone. What they're doing on the fintech side, I think that's what markets excited about. How that plays out, one needs to see. But there is enough to really believe the management, because they've really proven in the last decade. And I think time will tell how it plays out. But what's exciting about this sector is the strong are just getting stronger. There's a very clear path to growth, both on the consumer side and what they're doing on the real estate, in terms of home sales and home financing, the mortgage book. And I think the growth is very, very clear. And then there's an optionality of what they're doing in the fintech side, what they're really trying to build, and which could be really exciting, and probably institutions and markets willing to give it a much higher multiple for that optionality. And it'll be interesting to see what happens.
I would like to add here, Nikunj, if I were to add to that bull case, I think this is the only company in financial services that has acquired 50 million customers without a banking license, right? So I think people know that, are aware of that, and that's why they're getting rewarded. The people at the helm have done a phenomenal execution, and thus it gets a stellar premium, right? I think the second point to note over there is that, the banks frankly have been laggards in adoption, right? When Bajaj started in durable financing and used it as a customer acquisition engine, needless to say, it was a profitable business from the word go. Nobody thought they'd get to 50 million. I remember talking to a senior guy at a bank in 2012 or 13. They said just that this is too small. It's not even worth looking at. And today they all find themselves very far behind the curve in digital adoption. So I think somebody who got their 50 million customers should be able to cross-sell to 50 million customers. I think that's the bull case, and that's the case that smart investors seem to be making.
Charandeep, let's spend some time trying to understand the new buzzword, platform. Every promoter is now using the word that we are digital first in a platform company. What is the platform company? Everybody cannot be a platform company. I've heard managers of steel and cement company, they are also coming to us and they're saying, look, we are adopting digital and we are trying to be a digital first manufacturing company. Do you think this entire word, which is centered around the new platform creators or platform or network enablers, is slightly misused and abused? How should one judge between a genuine platform company versus a company which is claiming to be one?
Bull market, right? People were changing to .com at one time, if you remember. This is when 20 years ago, many viewers of yours weren't around then or weren't active then, but everybody wanted to become a .com company in 1999 and 2000. So I think that yes, this word platform does get abused, but let's just focus on the guys who deliver on platform, the guys who actually acquire customers, who have active users and have monetized them, right? I think it's important. That's the differentiation. Do you have enough users and are they actually paying for your services? So if you look at an angel broking, when we bought it, and again, please, I'm not advocating anybody buys angel broking. Everyone must do their homework. and this is not an advocacy at all, to go and buy a stock, but I will just tell you the contours around our investment thesis was, we didn't even call it platform then. We just saw that this is a platform, as you'd like to call it now, which is acquiring, I think, correct me if wrong, 4-5 lakh customers a month, right? And they've been doing 3 lakh customers a month, since COVID hit. So COVID was a enabler for them, but they already had the platform in place. It's just that people weren't willing to take it up. What happened was you had Jio come into India with high-speed telecom, which was a huge disruptor and an enabler for customers. And then you had COVID hit, which helped, which made people adopt technology much faster. I think a combination of cheap data and COVID made sure that the guys who had adopted technology, who were ready with their platforms, had users transacting on their platforms and have benefited from that. So I think ये platform का meaning जो है, I think there's no better example to explain than somebody who's already doing it, who's acquiring customers and who's able to monetize customers and get them to transact on their app or website.
Varun, maybe I'm missing it, but I don't see too many auto stocks or any bet on EV in your portfolio. Why is that?
Nikunj, as we always said, we follow our system, our screeners, and for us to really make a case, we want to see a clear trend, a visibility in earnings. So I think till now we've had some odd stocks come up, but we want to really see that industry tailwind, right? Like we saw in IT or metals or chemicals. So I think a large part of us really is looking, unless it's a clear individual company where the sector really doesn't matter. But a large part of our investing really revolves around choosing the right industries, right? Because if you've chosen the right industry, half your job is done. History tells us that if you're in the right industry, it's much easier. The struggle is over, right? It's much easier to make money. So I think we are still not seeing that kind of earnings momentum in the auto sector. But maybe it's around the corner. Maybe it's around the corner, and we are okay to be a little late as long as the story is very secular, right? Similarly, on the EV front, yes, many stocks have done well, but I think it's again a lot in the future. We would be happy to see some more numbers come around, and let's see how it really goes. But I think sometimes it gets a little tough to make a case, and we really want to be sure about what's happening. So our eyes are there. Let's see how it goes.
So Charandeep, based on your models and your projection of earnings, where do you think markets are running ahead of themselves? When I say they are factoring in not FY23, but let's say FY24 and FY25 earnings also. Well, the sector may enjoy a tailwind, earnings will grow, but markets are perhaps factoring in too much of good news. Where is that mispositioning happening?
It's possible, Nikunj. What you say is possible in the near term. I think bull markets, I think we are of the view that the earnings bull market is secular, and thus stock prices will follow. So if you want to call that a long-term bull market, you can define it as such. We are believers in that. And we are very, very diehard believers in the India story, and especially the times to come are probably going to be the most exciting in our life. Can this be interspersed with significant near-term froth? Could we be in the middle of near-term froth? Yes, that's entirely a possibility. These things are very hard to call. One should be very open to snap falls, bad news that comes out of nowhere, that hurts stock prices in the near term, that cleans out, people who with leverage positions. Markets do that, and it's very healthy to do that. So, let's put a contour around earnings. I don't normally track the Nifty earnings very closely, but I'm told that you're talking about numbers of between 850 and 900 for FY23. Now, so if I multiply that, that's what 22 times odd levels for 21 times for FY23. That's above historical mean, right? That's above historical mean by maybe 10 or 15%. You have a 15% correction, you're back to historical mean. To go significantly below historical mean, you need some serious damage, and you need a serious event, which can happen. Anything can happen. But the point is that if earnings growth is not disrupted, you find your way back. And I think that people should be ready for 10, 20% corrections, several of them. They will come. So gear up. I think it's not a straight line journey like the last 12 years has shown us. I think that is how I would convince investors to plan their positions and to plan their investments, because that's a sensible way to do it.
And before we wrap, Varun, which is the next IPO you're looking forward to? Zomato has been a success, but now we understand that it's going to be Nykaa, Policybazaar, Paytm. So which is that one big exciting business or IPO you're looking forward to?
I think definitely Nykaa. It's probably one of the best businesses we've seen for a long time. We really like Zomato also, but Nykaa is also phenomenal. So it'll be exciting to see what Nykaa does. We all pray for good valuations, but we don't get them at a good valuation. We all know what's happening with valuation, but I think keeping valuation aside, these businesses are phenomenal. I don't think India has seen such great businesses IPOing for a long time. Probably for the first time, India is seeing such amazing businesses which are so well run, which is growing so fast, which has such a phenomenal opportunity ahead of them. So it'll be exciting to see some of these IPO. Nykaa's, I would say Nykaa number one, probably Policybazaar number two. But even some of them which have listed like a Zomato, it's very exciting what's happening. It's very early, two-player market. Could be interesting what they can create over the next 5 years. Yes, expensive. Everyone's worried about losses, but let's see what they really create. Because if they get it right, if they can really do what they promise, sky's the limit, right? So yeah, Nykaa would be very exciting for us to see what happens.
Okay. Varun, Charanjeet, both of you, great to have you guys in the show with us and share all the insight that you just did.